Good morning. Here is today's Korean economic news briefing. Today, the Korean economy is grappling with significant supply chain challenges stemming from the ongoing Middle East situation, particularly concerning the vital commodity, naphtha. Vice Prime Minister and Minister of Economy and Finance, Koo Yoon-chul, chaired an emergency economic ministerial meeting today, announcing comprehensive measures to mitigate these shocks. The government has earmarked an unprecedented 1.5 trillion won in financial support for companies severely impacted by supply chain disruptions. In a critical move, naphtha has been temporarily designated as an economic security item. This designation allows for enhanced government intervention to stabilize its supply, including the swift securing of alternative import routes. Naphtha is often referred to as the rice of industry, due to its fundamental role in the petrochemical sector, serving as the raw material for ethylene production. A staggering 54% of Korea's naphtha imports typically pass through the Strait of Hormuz, making the nation highly vulnerable to disruptions in this region. Indeed, the domestic petrochemical industry is already facing a severe naphtha shock. Concerns are mounting that key facilities, such as Yeochun NCC, a major naphtha cracker in the Yeosu National Industrial Complex, may face a complete shutdown as early as March 24 if the supply crisis persists. This could trigger a cascading effect, impacting major players like Hanwha Solutions and LG Chem, and sending ripples across the broader industrial landscape through shortages of materials and components. Vice Prime Minister Koo stressed the urgency of the situation, stating that the government is exploring all options, including the expansion of coal, nuclear, and renewable energy utilization, and even considering a car rationing system if the energy supply outlook deteriorates further. To bolster the stability of small business owners and vulnerable segments of society, a war supplementary budget is being swiftly prepared, precisely targeting those most in need. This supply chain crisis is naturally having broader macroeconomic repercussions. Dubai crude oil prices have surged by 70% following the outbreak of conflict in Iran, signaling a red alert for Korea's import prices, given that 70% of our crude oil imports originate from the Middle East. Such a sharp rise in oil prices inevitably translates into higher import costs, fueling inflation. This inflationary pressure is not unique to Korea. Other nations are already feeling the heat. Australia, for instance, recently raised its benchmark interest rate to 4.10% due to concerns over Iran-induced inflation, despite historically low unemployment and robust GDP growth. For emerging economies, heavily reliant on energy imports, the oil shock is delivering a direct hit, with governments facing the difficult choice of either injecting fiscal resources or accepting slower economic growth. Countries like India and the Philippines are bracing for a potential 0.6% to 2% downward revision in their GDP growth forecasts. In the foreign exchange market, while the won has seen a sharp depreciation against the dollar, a monetary policy board member noted that this is not solely a domestic issue, pointing to Asia's high export to GDP ratio, 40.9% compared to Europe's 27.4% and the US's 7.1%, as a factor. Domestically, a more fundamental fiscal challenge looms. The Planning Ministry has warned that if the National Pension Fund depletes as projected, the fiscal deficit relative to GDP could swell to 5.1% by 2065, underscoring the urgent need for pension reform. Turning to the financial markets, the KOSPI has shown resilience, recovering above the 5,800-point mark today, with the KOSDAQ also displaying strength. This positive momentum is largely driven by the robust performance of semiconductor giants, with news of 200,000 won Samsung Electronics and 1 million won SK Hynix prices reclaiming their highs, buoyed by eased inflation concerns and a positive close on Wall Street. However, investors are cautiously awaiting the Federal Open Market Committee, FOMC, meeting over the next 2 days, particularly observing the Federal Reserve's dot plot for insights into future interest rate trajectories amidst oil price volatility. In the investment product landscape, the Codex Samsung Electronics Bond Hybrid ETF has surpassed 1 trillion won in net assets, while KOSDAQ active ETFs have attracted 1.2 trillion won, reflecting diversified investment interests. Interestingly, 1 in 4 Koreans are now shareholders, with Samsung Electronics and EcoPro BM being the most popular national stocks on KOSPI and KOSDAQ, respectively. In the bond market, a recent survey indicates a conservative outlook, with 35% of experts predicting a weaker won and 25% expecting interest rate hikes, signaling a shift away from expectations of rate cuts. Looking ahead at Korea's industrial future, artificial intelligence, AI, and advanced technologies are at the forefront. The government plans to invest 754 billion won by next year in the commercialization of AI application products through the Axe Sprint initiative, aiming to accelerate AI adoption across daily life and industries. Regional efforts are also significant, with Chungnam Province embarking on an ambitious 5.89 trillion won AI Grand Transformation strategy by 2035 to reshape its entire industrial structure. Corporate activity mirrors this trend. Doosan Tesna is seeing strong gains driven by increased AI demand, while Coupang is partnering with global AI chip leader NVIDIA to build AI factories for maximizing its logistics and delivery efficiency. In a strategic move for the domestic AI ecosystem, Korean AI startup Upstage is set to meet AMD CEO Lisa Su, signaling a strengthening GPU-based AI alliance. Beyond AI, the Global Healthcare Biomedical Engineering Research Institute has opened in Pohang, focusing on biosemiconductor research, a promising field merging semiconductor design with biology for advanced medical technology. In the semiconductor industry itself, Samsung Electronics and SK Hynix are competing to establish next-generation autonomous factories by 2030, leveraging digital twin technology and humanoid robots to enhance production and manufacturing efficiency. On the international investment front, energy and nuclear power are emerging as the most likely candidates for Korea's #1 project in U.S. investment, as the Korea-U.S. Strategic Investment Corporation forms. Finally, a quick look at the real estate market reveals mixed signals. Seoul's housing purchase sentiment recorded the largest nationwide decline in February after hitting a 7-month high in January, though the Jaeon's long-term lease deposit market remained relatively stable. Seoul City is proactively addressing housing instability for young people by offering tailored education on Jaeon's and Wolse monthly rent contracts, including tips for preventing fraud. Despite the general slump in regional housing markets, apartments near national industrial complexes continue to thrive, thanks to stable demand driven by large-scale employment and industrial bases. Overall, however, housing developers are reporting a worsening outlook for March, citing weakened buying sentiment and concerns over unsold units, partly due to the expiration of the capital gains tax surcharge deferral for multiple homeowners. As for the broader international economic landscape, the ongoing Middle East situation and its impact on oil prices will be a key focus for global central banks. The anticipation surrounding the FOMC's statements regarding interest rates and inflation will be critical. Additionally, rhetoric from former President Donald Trump regarding the refusal of some allies, including potentially Korea, to deploy forces to the Strait of Hormuz, indicates a possibility of trade pressures or security card leverage, adding another layer of geopolitical uncertainty. Implications for investors and general viewers, **. For investors, the immediate future appears characterized by volatility, particularly in energy-sensitive sectors. While the government's decisive actions to stabilize naphtha supply offer some reassurance, geopolitical risks remain high. Diversification and a focus on resilient sectors, such as semiconductors and AI, which demonstrate strong long-term growth trajectories, may be prudent. The performance of these tech giants continues to defy broader economic headwinds. However, the potential for sustained high import prices and inflationary pressures necessitates careful monitoring of corporate margins and consumer spending trends. For general viewers, the most tangible impacts will likely be felt through rising energy costs, which could affect daily living expenses and transportation. Government support programs, including the emergency supplementary budget and measures for small businesses, are vital safety nets. The ongoing efforts in AI and advanced manufacturing, while long-term, signify strategic investments in Korea's future economic competitiveness and job creation. Keep a close eye on official government announcements regarding energy policies and economic stability measures as these unfold. That concludes today's Korean Economic News Briefing. Thank you for joining us.